This is Mark from Caliber Home Loans. It is the weekend. We're going to go through the previous week, the week ending May 29th for market updates, and we'll talk a little bit about programs. So let's just dive right in. So here we're looking at Friday's chart. So Friday was actually a good day. Remember, the line represents the price of the bond, and the price of the bond moves in the opposite direction as the yield or the rate. So we had an upward trend throughout the day, which eased pricing a little bit on rates. So Friday was a good day. So let's take a look at the week, the last week. So again, we had a bump on Wednesday, which pushed rates down, and then pricing fell again on Thursday, and then Friday we went back up. So rates ended up a little bit better than they started at the beginning of the week. Remember, though, that the Fed is still the major player here, and they have reduced the amount that they're spending on bonds, and they're spreading out their money over 3 different categories of bonds instead of 2, per the conventional side and per the government side. So there's a little bit more volatility based on the reports that are coming out, but the reports, by and large, are affecting the stock markets and the government bonds more than they're affecting mortgage rates, because the Fed has been just steady Eddie as far as putting money into the system. And as long as that continues, we're not going to see the normal volatility that we would see without the Fed in there. You know, with the different reports that come out, the economic reports that come out. So that was so this is for the previous week. So let's go ahead and look at the last month. So again, we're actually lower in price than we started. So lower in price pushes rates up. So rates are actually a little bit higher, pricing a little bit worse than they were a month ago. So again, but if you look at the spread, we're talking about just over 104 to just under 103 maybe 10, so 1 over 103.2. So you're still not seeing a big spread as far as pricing. So you're not seeing a big spread as far as rate changes. There has been some upward pressure on rates, but you know, we're still at that bottom of the trough level. Rates are still super low, and we expect them to stay super low. So whether it's time to refinance and consolidate debt, or go to a shorter term mortgage, or to get out there and get pre-approved and purchase a house, some say rates would go lower. I don't know how much lower they're going to go. All I can tell you is what they are. I always joke with people. I said, if I knew what rates were going to do tomorrow, I wouldn't be doing this for a living. But it's a great time to jump into the market, whether you're refinancing or you're looking to purchase. So let's talk a little bit about programs. There seems to be some tempering with some of the lenders as far as the restrictions, because initially, with all the forbearances, everybody went into panic mode. They raised most lenders raised their FHA minimum credit scores from wherever it was to 620 or higher. Some lenders went all the way up to 660. A lot of lenders just stopped doing jumbos entirely, which Caliber was one of them. We're going to open that up hopefully by the end of this coming week. So I have true jumbo loans again. But we're starting to see some easing of restrictions on the lender side. It's lender by lender. Nobody has gone back to the way it was. There's still a little bit of trepidation and unsuredness, and wanting to make sure that we all have enough money to get through the forbearance issues. So that's going to hold us to a little bit stricter guidance for a while. As I had said last week, the federal government finally came out and gave true guidance on forbearance rules on the conventional side. So no one's going to be expected to write a check when they come out of forbearance for all the missed payments. There's going to be some options. They can either do a modification, they can pay the amount owed over time. They're looking at doing what I call a silent second. You take what you owe, you slap a silent second on the house, and it has to be paid off when the house is refinanced or sold. When the current mortgage is refinanced or the house is sold. So it looks pretty much like the government side at this point. So that's good news for the consumers. I know there's a lot of panic going on. that the reports coming out, some lenders were telling that their customers, their clients, that, well, you're just going to have to, if you come out of forbearance in the fourth month, you're going to have to write a check for 4 months worth of mortgages and mortgage payments. And my concept was, okay, well, I haven't been working for 3 months. How do I do that? So that seems to be fixed. So we can move forward from there. The number of forbearances is dropping. The number of new unemployed claims is dropping. I mean, it's still horrendous. We're at 40 million people that are unemployed, but the new numbers every week seem to be dropping a little bit. So that is good news. And as the states start to open up and people go back to work, hopefully that number will continue to drop. So really, there's still a lot of nervousness, a lot of questions out there with home buyers and with people that own homes, aren't sure what to do. The one thing that I've been saying is, if you don't need to be in forbearance, don't go into forbearance, because it adds extra stress to the system, and it's going to keep you from buying or refinancing for at least 3 to 4 months. When you come out of forbearance, you have to make 3 payments when you're out of forbearance before you can refinance or buy another house. So if you don't need to be in forbearance, if you can make the payments, and everybody's a lot better off for it. So anything else, give me a call. Any questions? MSHDA is rocking. We're doing a lot of MSHDA loans. A lot of pre-approvals out there. A lot of people are looking to buy homes. I know there's more and more homes going up for sale. And from all indications, the price of homes, by and large, are still going up. They may not be going up at the level they were in the last couple of years, but they're still going up. So that's good news. Any questions, give me a shout, 248-705-8431, and have a great day.